What's up, guys? Welcome to episode 13 in my monthly series where I present to you my top 3 dividend stock picks of the month. If you're new to the channel, welcome. In terms of investing, this channel focuses on a long-term buy and hold dividend strategy. The primary objective of this strategy is to generate consistent passive income via dividends and distributions forever. So this strategy has enabled my wife and I to become financially independent in our mid-30s. So if we could do it, so can you. So I'm Canadian, so most of the stocks and the funds that I discuss on my channel are listed on the Canadian stock market or on the TSX, the Toronto Stock Exchange. But since more and more viewers are from the US or even outside of North America, going forward, I will make sure to include at least one fund to my monthly stock picks that is listed on the US stock market, either on the NASDAQ or the New York Stock Exchange. So don't forget that as Canadians, you can avoid the 15% withholding tax on US dividends by keeping those funds in an RRSP. So if you like my US listed stock pick of the month, try to put it in your RRSP, of course. So there are a ton of great US listed funds out there that give really high yields. So it would be a shame for us Canadians to miss out on them. So March 2021 was another good month for stocks, nice and steady overall, pretty boring. The Canadian stock market in particular did well as financials and energy stocks performed pretty good. Those are the two dominant sectors in the Canadian market, by the way, so it definitely showed in March. The rare surprise in March was a little bit of weakness in the technology sector, but it has since recovered to a certain extent. I say it's rare because tech only seems to go up, but we now see that a sector can't just go up indefinitely. So eventually investors will take their profits by selling, thus causing a small dip. This is normal and expected and a good thing for us long-term buy and hold investors who invest regularly every single month. It makes the decision much easier for what to invest in for that particular month. So technology stocks will definitely be center stage in this month's stock pick. So the 4 criteria for my stock picks, once again, as usual, I own the stock myself because I talk the talk and walk the walk. The stock must provide a source of passive income, so a dividend or a distribution if it's a fund. Number 3, the dividend or distribution must be relatively safe and sustainable. And number 4, the stock needs to have good value. If you invest regularly every month like I do, you should always try to find something that's undervalued because something always is. So without further ado, here are my stock picks for April 2021. Alright guys, pick number 1 is QYLD. No surprises here. It's the NASDAQ 100 covered call ETF. Keep in mind this is a US listed stock, so it's a stock listed on the US exchange. The fund manager's Global X, the dividend payout is monthly and the annual dividend is about $2.70 a share. This is an estimate because every month their distribution changes. So this ETF tracks the NASDAQ 100 index. So what is that index? Well, it's the top 100 companies listed on the NASDAQ excluding financial stocks, and they sell monthly covered call options to boost the dividend yield. So the 1-year high for this fund was 23.58, giving you an approximate dividend yield of 11.45. In March it dipped a little bit, so it's at 22.44. Very rare occurrence for QYLD to dip. So right now you would snag an approximate dividend yield of 12.03%. So really good. So my points and reasoning for this one, it shouldn't be a surprise. QYLD is the undisputed king when it comes to US listed covered call ETFs. It's the biggest one at 1.5 billion market cap. It has a history of very high and consistent monthly distribution since 2014. Typically the yield is 10 to 12% yield. You could actually see them here. I listed the distributions for the last 12 months, and as you could see, they're fairly consistent at about 21, 22 cents a month. So this is a great way to get market-weighted exposure to the major tech giants in the US like Apple, Microsoft, Google, Facebook, etc. thanks to the index that QYLD follows, right? The NASDAQ 100 index. So if you're wondering what market-weighted is, well, it just means that the top companies on the NASDAQ 100 will make up most of the fund. So these are, I put the top 10 here. So you see Apple, Microsoft, Amazon, Tesla, Google, Facebook, Nvidia, PayPal. So these are are the top 10 stocks out of the 100, and they make up more than 50% of the fund. So that's what market weighted means. If the company is bigger, like Apple, well, it's going to take up a bigger portion of the fund. So what happened in March, there was a slight but rare dip that occurred for test stocks, which brought down this fund. So it's a great time to pick this one up because it's undervalued. There's no financial stocks as well in the whole fund, which is a great way to really diversify an income-focused portfolio, because normally an income-focused portfolio is very heavy on the financial. So this is a great way to offset that. And this fund is actually a perfect candidate for us Canadians to put in the RRSP. There's no 15% withholding tax on dividends if you keep the US funds in an RRSP. So this is actually, believe it or not, my number one holding across all my accounts. It's very present more in my RRSP accounts, but in total I have $50,000 exposure to this fund, and it's been amazing just picking up those sweet dividends every single month. Pick number 2 is also a technology pick. It's TXF. It's Canadian listed. It's the Tech Giants Covered Call ETF from CI First Asset, one of my favorite fund managers. The dividend payout is quarterly, not monthly, however, but the annual dividend is really high at $2.37 a share. Keep in mind, this is the average for the last 4 quarterly payments, so it's the average for the last year. So this ETF holds 25 of the biggest technology companies in the world, and to enhance the dividend yield, it uses a covered call strategy. So unlike QYLD, the first pick, this is pure technologies, where QYLD, there's some other stuff as well, even though it's like very, very heavy 50 or 55% technology. This is full technology. The 1-year stock price, 21.26, giving a dividend yield of 11.15. Absolutely incredible. But right now the stock price went a little bit lower because of that tech dip, so it's $19.64 as of March 26, which is giving you an enormous yield of 12.07%. How else can you get such a big yield with technology? I haven't found one yet, so you let me know if you find one. So my key points and reasoning for this one, like I mentioned before, there was a slight but rare dip that occurred for tech stocks in March 2021. So it's a good time to grab this one. You get very high income for a covered call ETF that focuses on tech. I mean, tech companies usually give no dividend or very, very low dividend. Because they typically reinvest all their profits heavily in research and development, which causes us income-focused investors a dilemma. So this ETF solves that problem thanks to that covered call that writing. And CI First Asset, their policy is they write covered calls on 25% of the portfolio. So you're still capturing, and for those of you who are worried about capturing the upside in share price appreciation, well, you will still capture 75% of share price growth, because the covered calls, like I mentioned, are only written on a quarter of the portfolio. So this ETF has really the biggest tech companies in the world, all with one ETF. You could see some of the holdings that I put there. Most of them you will recognize. All the big boys are there, like Apple, Microsoft, Google, Facebook, Nvidia, etc., etc., etc. And another thing I want to mention is that the distributions have been higher than normal in 2020 thanks to market volatility. So we all know that market volatility, or when markets go haywire, it's actually good for covered call ETFs, because the call options that they sell become more expensive. So this fund performed really, really well during 2020, and their latest distribution is also, which just came out last month, or this month rather, is also very, very high. So a great ETF with a great track record that invests in technology. What more do you want? Last but certainly not least, my third pick is the Real Estate and E-Commerce Split Fund by Middlefield Fund. So the stock symbol is RS. Keep in mind, this is another Canadian listed stock. The dividend payout is monthly, and the annual dividend is firm at $1.20 per share, or 10 cents a month. So this is a brand new split fund that holds 15 of the best REITs, focused primarily on industrial properties that capture the e-commerce part, like the name says, real estate and e-commerce. So e-commerce giants need a lot of industrial or warehouse space to actually sell their products. So that's why this fund focuses primarily in the industrial property. So the 1-year high, we don't really have it because it just came out. So the current price is about $14.90 as of March 26, which giving you a really nice dividend yield of 8.22%, a really good yield for REITs or for real estate. So my key points and reasoning for this one, this is a great new way to invest in real estate as an income investor. This is the first ever split share fund that focuses exclusively on real estate. Normally split share funds focus a lot more on the financials, but this one is just on real estate. So it's really, really great. I really commend Middlefield to come out with this amazing idea. This fund was really created to capitalize on the real estate recovery post COVID-19. That's taken exactly from a Middlefield side. This is why they created the fund in the first place. Middlefield, if you didn't know, is really an expert when it comes to real estate. They manage my favorite REIT ETF, IDR, on the TSX, of course. When it comes to REITs, it's my favorite ETF of all time. It beats ZRE or XRE or what's the Vanguard? VRE, where it's just an index REIT ETF. Well, IDR, it has some index and it's also actively managed with higher yield. So RS is pretty much a mirror image almost of IDR when it comes to what it holds. You could see the holdings here. I put the top 10 holdings. So really only the big guys that we all love and know, like the Canadian Apartment REIT, Brookfield Property Partners, RioCan is there, Smart Centers is there. And of course you have all the industrial ones, Dream Industrial, Granite, Summit, WPT, etc., etc. So what I really like about the split share fund is that it has a very strong unit NAV. Right now it's over $25. So in my opinion, it will never go under that $15 unit NAV threshold, which means it will never miss any dividends. So in case you don't know what a unit NAV is, it's split share funds, we all know, has one preferred share and one class A share, one capital share. We're only interested in the class A and capital share. So you combine those two shares together to get the unit NAV. And if it's above $15, the dividend will always get paid out. So considering it's $25, way ahead, it just means it'll probably never miss any dividends unless real estate has a humongous crash, which I don't think is going to happen because it already occurred recently. So right now, split share funds usually have covered call writing on them to enhance the yield, but I followed up with the manager and they said that they're not writing covered calls on it yet because they want to fully capture the real estate recovery. So if you want to know more details about this fund, I have a video specifically on this fund, so make sure to check it out where I discuss it in detail and also show the holdings and I go on the fund's website, etc. But a really great way to capture overall the real estate recovery post COVID-19. As always, please support me. Please support this channel by hitting that like button. It's free for you and it helps the channel out, so it's a win-win. Make sure you're subscribed as well so you don't miss out on next month's stock picks as well as other content, all designed to really help you on your investing journey. Of course, guys, don't forget to visit our website, passiveincomeinvesting.ca, where you can buy my digital product, the Ultimate Dividend Passive Income Investing Package. All the stocks you'll ever need to really build your own portfolio, and it comes with lifetime updates. So you only need to purchase it once and you will get a free copy in case a new version comes out, which it will. On my website, you could also book a one-on-one video consultation with me personally. If ever you want to ask me a million questions, you want me to review your existing portfolio, you need help building a brand new portfolio, I'll do my best to help you any way I can. I love doing it. We're booked up. May is already fully booked up almost. I think there's 1 or 2 appointments left, so it's pretty crazy, but I love doing it. So go on my website. Very easy to do. There's a big calendar right on the homepage. You find an empty spot and you book your appointment. And of course, we're on Instagram and Facebook, so make sure to follow us there if you use those social media platforms. Our mission remains the same, guys. It's to help everyday working people to invest on their own, to build their own stream of passive income to enhance their quality of life. So with that, take care, guys. Stay safe. Get vaccinated as soon as it's your turn so we can finally get back to normal and enjoy some of that passive income. Take care.